Now, some of the emerging markets, we have seen some challenges in the current year, but again, as we see the tightening of the financial conditions in those markets, I think that's really put a tightened the purse strings in terms of investment. But we do see strong exports in emerging markets. We do see solid consumption growth, again, as income levels grew in those markets. And importantly, the risks are different by market, but the downside risks seem to be abating towards really where the opportunity is in the emerging markets going forward. China is one for an example where we certainly saw a slower paced growth this year. But current economic expectations are that China will continue at a slightly lower but real growth rate, probably close to 6.5%, which we'll see then reverberate across Asia. And so while we had a slower pace this year for China, we are expecting to see good performance in Asia over the rest of the year. But we take that down to India. The projections for real GDP growth in India are down significantly, and we're seeing the currency impacts in those markets. Any reactions on Southeast Asia, Asian growth in general, and how we expect to see that?
I think I would still be relatively confident in terms of growth opportunities in China. I think India is a different issue in terms of the volatility around the rupee is an issue, and also there's growing political uncertainty there with an election coming up relatively soon. So I think there's probably more reason to be cautious about growth in India, but certainly China I would feel pretty confident about. And you do have countries like Indonesia now also coming along to provide some more momentum in terms of growth.
Yep, and certainly we saw Japan become a very active investor over the past year, putting capital to work as they also sought growth for their capital. As we look around the balance of the world, Latin America, the recovery in Brazil certainly continues at a moderate pace. The depreciation of the exchange rate is helping. Pickup in consumption and overall policies to drive investment in Brazil. So certainly that's a market that's attracted a lot of attention and we expect to see more of. Mexico has always, I think, seen a great level of foreign direct investment, and even kind of following a little bit with the power and strength of the U.S. economy continues to be a strong area. Sub-Saharan Africa, it's an area that I think we are increasingly talking about as an area for opportunity for a variety of reasons. Obviously that is a series of different countries, each in a different stage of maturity. But I think the stability, the commodity-driven investments coming out of Africa, the growth of consumption, and generally what I'll call a focus on fiscal investment, financial investment, and certainly stability in exchange rates. And then bringing it back around the Middle East, North Africa, again heavily oil-driven, but we are seeing again more stability, despite the social and political and security concerns. But as we look at each of these regions, I think it's setting a stage for what really is opportunistic investing in these markets.
Well, I think, John, the other point is that in everything you're talking about there's an absence for once of some sense of crisis at some point or some part of the world. I think we've gone past the sovereign debt issues, it would seem, in Europe. The Eurozone and the thoughts that there could be a collapse of the Eurozone seem to have receded significantly. And you've got countries now reporting positive economic growth as opposed to contraction. So, I think you'll probably hear throughout this, I think there's an improved level of confidence, and I think that comes from the stability and better certainty.
Yep.